The price of gold is soaring. Should you invest? This is the question that we are going to answer in today's video. Hey everyone, Dr. Jonny Walker here, and today we are talking about the gold rush. Not the 1800s kind, I'm talking about the 2025 gold rush. Gold is flirting at the time of this recording at around $3,900 to $4,000 an ounce right now. And that's more than double what it was just a few short years ago. Matter of fact, in 2021, when I was looking at gold, it was $1,800. And here's a fun fact. Back in 1920, 1 ounce of gold could buy you a really nice tailored suit. Fast forward to 2025, and 1 ounce of gold still buys you a very nice tailored suit, maybe even nicer. So the question is, has gold really gone up in value, or has the US dollar simply gotten weaker and sicker? That's what we're going to unpack today, and more importantly, what you as a dentist or a business owner should be doing about it. Now, gold has always been seen as a hedge, a safety net when the world gets a little uncertain. And let's be honest, right now we are seeing a lot of uncertainty. Inflation that's sticky and becoming entrenched in our economy. And inflation will rise again. New tariffs, global tension, bond yield spiking, and growing doubt about the long-term confidence in the US dollar. Now, when these forces collide, where do investors and even central banks of other countries go for safety? They run toward gold. And that's exactly what's happening right now. Now, gold isn't magically becoming more valuable. It's protected purchasing power while the dollar weakens. This pattern repeats itself again and again throughout history. But this time we are going to be paying attention, because every time paper currencies or fiat currencies lose strength, gold holds its own. It's the world's oldest insurance policy. So yes, gold is shining. But the bigger story here isn't about gold itself. It's about the macro storm we are entering, called inflation, a weakening currency, and tightening credit. That's exactly why investors are turning to historically proven alternative assets. Gold, real estate, oil and gas, tangible physical assets that actually hold value when the paper wealth starts to wobble. All right, now let's talk about the pros and cons of gold. Now, the pros: historically proven through human history to be a hedge against inflation and economic downturns and uncertainty. Number two, it is a store of value when confidence in paper money, especially fiat money. Fiat currency means that it's not backed by anything. There's no collateral other than a faith. We're going to talk about that in a little bit. Number three, gold is portable, it's durable, and it's globally recognized to hold value. And number four, in extreme scenarios, it can even be used for barter or trade, right? Back in the day, people used to pay for things with gold. And if you wanted to buy anything, now you had to lug a bunch of gold, especially if you were buying something big. Like, hey, look, maybe back in the day, you want to buy 2 donkeys. Well, that would cost this X amount of gold. Well, instead of carrying these heavy wheelbarrows full of gold for big purchases, they started making banknotes, right? Banknotes are basically and memorialized with a piece of paper. Eventually, this led to paper money. The gold could be redeemed for physical dollar. Hey, you got one, you give us the gold, and we're gonna give you this piece of paper that says that you have this piece of gold. So when you go and buy something with this piece of paper, what you're actually doing is trading the ownership of the gold. By passing this person this paper note, your gold that's sitting in this in some bank account or bank or some type of holding place, now that person holds that gold. They have the right to gold. They can go and take that paper money to the bank, exchange it back for gold. So that was collateralized by gold, right? So it's backed by gold. That dollar is backed by gold, whereas in a fiat currency, there is no gold standard. And American dollars back in the day used to be backed by gold. Then they went to a thing called fractional banking, where you only need to have part of the gold to represent the money. And then we went to a full fiat currency where it's no longer backed by gold. We're going to go into that again. Now let's look at the cons. That was a side note. I'm sorry. I just want to give you guys as much value as possible in these videos. Now the cons of gold. Number one, no cash flow. Anybody that follows Walk of Wealth, we favor assets that produce income. or cash flow. So there's no cash flow. Number two, there's no yield, right? There's no rate of return unless you sell the stuff. You don't know what it's worth until you sell it. Number three, there are no tax advantaged. There are absolutely no taxes. You buy gold for $1,800, you sell it for $3,600, you're subject to tax. Number four, it's very hard to leverage. And for dentists, we're used to our practices producing 30 or 40% returns or higher. So gold might feel boring. Now, gold is resilient, yes, but it preserves wealth. It doesn't grow wealth. Important distinction. Let me say that again. It preserves wealth, but it doesn't grow wealth. Now, that's where real estate shines. Real estate, just like gold, is a proven inflation hedge, historically proven, but with one huge difference. If you buy real estate right, it pays you while you wait. With real estate, you get cash flow. This can often be monthly or quarterly. You get massive tax benefits, depreciation, cost segregation, 1031 exchange, and even the biggest buzzwords right now, which is bonus depreciation. With real estate, you get appreciation. Property values are rising alongside inflation. And while gold preserves purchasing power, real estate can actually grow it and give you income along the way. That's why I like being real estate heavy during inflationary periods, which we are headed for, especially in income producing commercial real estate that pay distributions even during downturns. And speaking of inflation hedged cash flowing assets, let me mention something very exciting we're doing right now in our investment arm of Walk of Wealth Capital. We currently have a live oil and gas deal, and at the time of recording, we are already 90% subscribed. Now, this asset class not only hedges against inflation, but it also offers some of the most powerful tax advantages available today, including deductions that can offset W-2 income, 1099 income, and even capital gains. So if you're a practice owner or a business owner looking to diversify into hard assets that protect purchasing power and reduce taxes, this is one to look at. You can find more information or schedule a call and we can send you over all of that information. Go to our website in the link below. So the question remains, should you own some gold? And I believe yes, but be very smart about it. Step one, fund your reserves. Step two, max out your tax advantage retirement account. Step three, with dollars left for diversification, consider a small allocation, maybe 5%, maybe 10% if you really like it, towards gold. You can hold some digitally, but I like having a little physical gold too, in the form of gold coin. Now, why coins? Well, because if things ever go really sideways, and if access to dollars gets restricted or confidence drops and the US dollar falls away, well, we're going back to the olden time where gold can still pay for things and you can get things of value. Now, the coins is an easy way to dispense it. Imagine if you have gold bars or jewelry. Very difficult to exchange, but when you have coins, you have the ability to make into smaller denominations and pay for smaller things. Gold coins are instantly recognizable and they can be exchanged for goods and services readily, even during bad times. That's real, tangible liquidity. Humans have trusted gold for thousands of years, and for good reason. Now, here's my bottom line. Gold is resilient, real estate is powerful. Both are excellent hedges against inflation, but only one pays you while you wait. Diversification isn't about chasing shiny objects. It's about protecting your time freedom and your wealth from forces that are not within our control. So yes, own a little gold, but don't forget to own productive assets too, especially real estate and oil and gas. Now, if you're a dentist or practice owner who wants to understand how to combine gold, real estate, and oil and gas to create cash flow, reduce taxes, and build real freedom, let's talk. Like I said, we're already 90% full on this current oil and gas opportunity, so timing matters. You can learn more or book a call with my team at www.walkofwealth.com, WALKOFWEALTH.com, walkofwealth.com, or drop the word gold in the comments and we'll reach out. Until next time, this is Dr. Jonny Walker, helping doctors and business owners create true time freedom through smart, passive invest. Until next time, stay calm, stay curious, and keep building your walk of wealth.